Hello, good day, and welcome to this webcast on procurement challenges and opportunities in emerging markets. My colleague Alex, who is Managing Director of GEP in Latin America, and myself, we are holding this webcast, Alex in Portuguese and myself in English. A brief introduction. I am a vice president with JP based out of Mumbai, and I look after JP's consulting and growth in India and the Asia Pacific. I have had over 12 years of management consulting and industry experience working with large companies in the United States, Europe, and now in India. In terms of the agenda for this discussion, before we get into that, let's just talk briefly about GEP as a firm. So we are a very global company with offices in 7 countries, very growth oriented. We currently have a headcount of 700 plus people, 120 plus customers, and we have managed for them $50 billion in spend across 200 different categories, spanning across 22 different countries. We have extensive sourcing and procurement experience. We are considered one of the top 3 sourcing and procurement services firms in the industry, offer a wide range of services from consulting, outsourcing, and technology. We have a full-fledged SaaS-based technology platform, and we are extremely focused on realized savings. And our technology platform and our services span the entire spectrum of source-to-pay functions. We are also financially very stable, have an extremely strong balance sheet, no debt or contingent liability, very growth oriented. We are approaching 1,200 FTEs by the end of 2012. Our contracts with our clients provide long-term and stable cash flows, and our overhead structure and cost structures are both relatively lean and optimized. So with that as an introduction of our company, let's get into what exactly are we going to talk about as part of this webcast. So essentially there are 3 major items that we're going to cover. We are going to talk about the emerging market characteristics. Essentially, how do we define emerging markets? What's our definition? What countries fall under the emerging markets categories? And next thing we're going to talk about is procurement organization and challenges for companies that are operating in the emerging markets. So what types of challenges do they face? The rationale behind facing those challenges, and and what can they do about it is basically what we'll cover in the checklist for success. So it will be an engaging half an hour discussion, and hopefully you all will enjoy it and learn from it. And if you have any questions or any feedback, please feel free to provide that by directly emailing to us or calling us. Moving on, emerging market characteristics. So what characteristics define emerging markets? Of course, most of the companies here, as well as the general economy, are in a state of high growth compared to, for example, the recessionary environment that is persisting in the more developed world. Along with high growth, there is also a very high rate of inflation. India is battling very hard to fight inflation. There have been, interest rate hikes of 12 times, and even then, inflation is not under control. There is also persistent market imperfections and information asymmetry. Information asymmetry with regards to almost anything and everything. Basically, there's less amount of published literature or secondary research compared to what is available in the developed markets. And then market imperfections in terms of how things are priced, how volatile the market is in terms of pricing, supply, demand. They're also less stable than what you will find in a more mature economy. Hand in hand with that is this problem about inconsistent product quality and standards. There are fewer standards, and I would say fewer established standards about product quality to begin with, and then enforcement of those standards is another issue, which lead to a lot of variations in products at various price points, at various quality points. Along with all of the above, there is also a rapidly changing regulatory landscape. Excuse me. This is this is visible through the introduction of various tax regimes. For example, in India, the government is dilly-dallying with the introduction of GST. VAT was introduced with mixed success. There is still some penetration of that. And then last but not the least, there are infrastructure bottlenecks. And we will talk about this briefly on the next slide. But suffice to say, there are investments being made in building or making the infrastructure better. But there are still several infrastructure bottlenecks that persist, that hinder supply chain operations or efficient supply chain operations, I would say. And procurement being an integrated part of supply chain, that affects procurement function as well. In terms of emerging markets, of course, it's no surprise the BRIC, Brazil, Russia, India, and China. Along with that, there's a few other countries in Latin America, such as Mexico, in Asia Pacific, Thailand, Malaysia, and then there are countries in Eastern Europe. And they all, in our perspective, our viewpoint, fall under this umbrella of emerging market, and they share all or most of the characteristics mentioned on this page. Moving on and talking a little bit about the infrastructure issues. So what we tried to do on this page is compare maybe Asia versus Latin America when it comes to dealing with infrastructure issues. Commonality is some of the issues are similar. And then, of course, actions taken, new developments, right? This is happening at a pretty good pace across both of these regions. If you talk about Asia, the projected spend as a percentage of GDP on infrastructure-related projects is probably higher compared to Latin America. Latin America's spend in these areas. India specifically lag in very many infrastructure areas, including export lead time, access to basic facilities such as sanitation and others. And then similar characteristics exist in the Latin American countries. For example, regulatory risk premiums are at 6% of the cost of capital. In terms of what new actions and developments are taken, there are several infrastructure projects, as you can see, listed below at billions of dollars that are being undertaken in various different countries. Why is this important in the context of procurement? Well, it's important because these infrastructure bottlenecks directly impact logistics of supply chain. And that almost directly impacts procurement. If your logistics is not going to be good, your lead time to order, for example, increases, which means you have more capital, more dollars, or your local currency tied into the working capital. And then it also sort of impacts the forecasting ability or the deterministicness of the goods to arrive on time. And because of these bottlenecks, I think procurement needs to be more efficient, but they face their own set of challenges, which we're going to talk about in the next set of slides. So moving on to page 7. One thing that we are seeing, though, is procurement's level of influence is increasing in emerging markets, right? So, for example, there are recent surveys that say that procurement's level of influence and full involvement in all spend areas across direct and indirect categories is going to increase the most in emerging markets compared to in the mature markets. At the same time, though, procurement's level of influence is highly correlated to hard benefits, which means bottom line savings. And that means that the influence is high for categories where savings potentials are higher. With that said, the degree of challenges that procurement organization faces in emerging markets, they vary by the company's size, industry, and the country that you operate, but there are some consistent themes that emerge based on our work experience working with our clients. And those are, number one, there are proliferation of tactical and transactional activities almost across organizations, and specifically when it comes to indirect categories. Supplier development and management practices, we have seen them to be ad hoc for the most part. Order management processes are suboptimal. There is a huge amount of paper trail, and that leads to lack of governance. Technology investments, as we have seen, are still at a low level. Adoption of enterprise-wide procurement tools have still not reached that level of maturity as in the developed world. And then last but not the least, there is limited qualified talent and organizations with strategic mindset when it comes to procurement. The next set of challenges, the next set of slides detail out the contributing factors for the 5 challenges that we mentioned above. So let's get into that. Number 1. Proliferation of tactical and transactional activities. Now, as I was mentioning to you, this is more apparent for indirect categories, and I think this, and we believe that this hinders procurement's value add to the enterprise. So why is that? Why do organizations face a proliferation of tactical and transactional activities? What's the rationale? We believe one very important rationale is absence of framework contracts when it comes to managing indirect spend, as a result of which most of the purchases are treated as spot buys or one-time buys. And then what happens as a result of this, you do a quick RFQ or an RFP. You have to look out for vendors who will supply this to you. You do not have a whole lot of price transparency. And then you are creating, for example, a purchase order for each one of these, and you are processing that, and that increases the lead time to buy. There is tactical orientation of procurement personnel. Now, to some extent, this is driven, or this is a direct corollary of the above, of the first point. Procurement personnel, there's a skill issue when it comes to strategic mindset, but there's also this issue that they are, almost PO processing machines. They're processing POs as they're coming by, and more than 80% or 90% of their time is spent on just doing just this. And as such, they have less amount of time available to them to focus on strategic activities. There is also the desire within companies to channelize as much of the spend through procurement. And this is to make sure that the dollars are spent with the right amount of governance, with the right amount of supervision, and optimally, which is a good thing. But then what comes with it also is there are multiple levels of approvals. And because they're trying to channelize the last dollar, for example, through procurement, it increases again the number of transactions that a company will need to undertake. And this becomes exponential because there is no P card or very limited catalog that is available. So people cannot use P card at their own discretion, or they can't select from a set of items, for example, which can be managed through a catalog. And last but not the least, you add all this with decentralized buying, and specifically in manufacturing companies which may have plants or sites located in remote corners of the countries where there is no access to any enterprise system. Probably, purchase orders are being processed manually, they're written up manually, and at some point you want to have visibility into all what is going on. And so all of this combination of all of these 5 things, they lead to a huge proliferation of activities. And what you see on the right side of this page is it shows, activities through which a procurement organization would add value to the enterprise, and the representative time allocation. So ideal case would be that people would be spending more of their times doing sourcing strategy, category management, supplier development. Instead, what is happening is they're spending all of their time managing transactions and very limited time or limited time on the value enhancing categories or value enhancing activities for a procurement organization. And this is definitely impacting at a holistic level overall value that procurement is adding to an organization or to companies' growth. The second challenge that we see is supplier development and management, which is largely ad hoc. And then this is compounded by the market, which is extremely unorganized. And since overall there is diminishing supply value creation, I shouldn't say diminishing, but there is diminished supply value creation. Again, talking about some of the reasons or rationale behind ad hoc supplier development and management, some of the key reasons that surface are unclear or lack of documented sourcing strategy within a category. Again, this is a direct corollary of procurement personnel not being able to spend a whole lot of time doing strategic thinking, and as a result what happens is there is not an unidirectional sourcing strategy, and that impacts the supplier development strategy, for example. When it comes to supplier pre-qualification criteria, let's say a company is trying to develop a pool of suppliers or a vendor panel, and they on an ongoing basis want to qualify a supplier or enrich this pool. What we have seen is there is not a structured set of pre-qualification criteria that a company can use to pre-qualify suppliers. So that's at the front end part of the supplier development process. Then for suppliers that are actually on board, the performance management of those suppliers is also challenging, because sometimes there is lack of performance management scorecards. Sometimes there are scorecards available, but they are not practiced. And then in many cases, maybe scorecards are available, they are practiced, but they are not reported meaningfully, and right insights are not drawn from those results to make future supplier selection decisions, as well as proactively using those inputs for supplier negotiations. Finally, there are external set of factors. So these are internal to the organization. And then there are external challenges. Companies need to deal with large, fragmented, and unorganized supplier market that make it very difficult to obtain required information on the vendor landscape. And then you have to deal with government bureaucracy, business informality, and lack of professionalism. What do these all lead to? They lead to diminishing returns from suppliers. So companies can end up with higher total cost of ownership for purchased goods and services. Maybe the buying price or the purchase price is low, but then over time, due to lack of quality from the supplier, they end up spending more on maintenance of products and goods, as well as contracts that cannot be enforceable on the basis of SLAs. The vendor panels do not always have best fit vendors with respect to desired levels of quality, serviceability, and cost. Again, this can lead to total cost of ownership as well as suboptimal vendor selection decisions. There are also limited benefits from collaboration and innovation with suppliers, right? Because you do not have the right pool in the vendor panel. And this is an advanced, supplier management practice, as well as, joint ventures with suppliers to improving product cost quality. You basically cannot undertake those practices because your vendor panel or pool might not have the right set of vendors to begin with. Moving on to our third point, which is order management, right? And we said that order management can be suboptimal, and it is often a result of manual processes and lack of integrated technology. And this, we believe, lead to serious compliance issues, right? So why is order management suboptimal? Why are there a lot of manual interventions? So what we are seeing in organizations, at least with large organizations in emerging markets, is generation or acquisition of POs is automated, but invoice processing is not, right? And when we say, PO generation or acquisition processing is automated, I'm not saying that it's at all companies, but at most large or medium-sized companies, people try to generate electronic POs. But then invoice reconciliation is not at all automated at most firms. The goods receipt notes, right, for purchased materials and services are often generated at plants and sites, and they can be in remote parts of the countries, and they happen to be non-electronic. And then you have to reconcile that with invoices, and so therefore, you have something that is already in paper trail. Countries such as India, for example, have regulations against e-invoicing. A company cannot electronically invoice you, therefore your invoice comes in the form of a hard copy. So now, even if your PO was generated electronically, you now have a paper trail invoice and you have a paper trail on the good receipt notes. So you have to reconcile them. Companies in emerging markets may also need to deal with non-uniform state-level taxes when it comes to making purchases. There is no GST, so in certain, depending on which state or city you're taking delivery of goods, different level of taxation might apply. And all of the above is made even more complex by inconsistent data entry. And this is completely internal. This is because there's not a structured process that companies might be following in terms of raising a standardized PO, for example. And this impact, capture and visibility of the total amount of spend. What do all these lead to? Compliance erosion. And we believe, and we have seen that compliance, begins to erode almost immediately after contracting due to all of this process leakage, right? So people can identify a certain set of savings, but then when they're trying to track them to realization, there is a huge amount of leakage. And many times companies don't know why this leakage has happened. And if there is not a leakage, people also don't know whether there has not been a leakage. So there's almost a total lack of transparency into this downstream process area of contract to pay. Moving on to our fourth point regarding technology adoption and investments in enterprise-wide procurement tools. We believe this still has a long way to go. There are some perceived uncertainties on the ROI of these tools, which is also a skill issue at some point and an awareness issue. First off, in the developed countries, because adoption has been more long-lasting and for several number of years, I think we can show a correlation or a strong correlation between companies with higher level of automation and better than average savings. Unfortunately, in the emerging markets, because technology adoption is still at its infancy, that strong correlation cannot be shown, and that's why there is perceived uncertainties regarding the value add from such tools for companies, and especially at smaller firms. Then you have investment hurdles. So typically spend analysis and our P2P tools are more expensive. And if you talk about companies in the emerging markets, they always do not have a higher level of spend. And so it becomes a hurdle. Well, why do I invest a good amount of money or a large chunk of money in capital investment buying, let's say, a spend analysis tool when my total spend does not demand that level of investments, right? What we are also seeing is e-auction is actually catching up. It by far remains the single most adopted sourcing technology. There are companies that mandate an electronic auction for anything and everything that they buy. Let's say for financial services companies, we are working with a financial services company, and they mandate that everything that they buy will have to go through an e-auction. And there's a greater adoption of those tools. But then that's a different mandate, that for anything that you buy, you do e-auction. Now, there are other companies who want to use e-auction. They don't have such a mandate, and they are uncertain as to what categories might be more suitable for e-auction vis-a-vis others. They also are uncertain about, let's say I conduct an e-auction and I select bidders. What is the certainty that the bidders who have bid for the e-auction have come out, for example, in the lower range or competitively priced, that they will honor their bids, right? There's uncertainty around that. Then if we talk about supplier management, when many companies that we are talking to, they want a supplier management tool, their bigger interest is, when I buy the tool, do I have access to your supplier database? So instead of buying the supplier management tool to create an integrated portal to improve communication efficiency with suppliers, to be able to, for example, manage performance of their suppliers on an ongoing basis with a greater amount of visibility, their deeper interest is, can I get your supplier repository or access to your supplier repository for the categories that we buy, right? And again, this is coming from a lack of awareness of what the tool does and what should it be used for. All that said, if you look at the S curve on the right side on this page, you can see that we believe, and this is our point of view, e-auction and e-supplier are definitely in the takeoff stage, whereas e-spend and e-purchase, they really have not taken off. There will be some more time that will be required for people to understand the real value of these tools. What level of process automation would these bring? What level of spend visibility would these tools provide? And what would be the ultimate benefit to the organization, so they can build the case within themselves, or rationalize within themselves that there is value in investing. Our last point is about limited qualified talent and strategic mindset. There are reasons for this. And what is happening as a result of this is some companies are actually starting to recognize that, which is a good thing, and they are trying to build a case for procurement outsourcing, which again, is a forward-looking thinking, right? Now, why is that? Is there really a shortage of strategic procurement managers? And we believe that it's a combination of two things. A, lack of exposure to global best practices and processes, and then B, there are probably critical thinkers within this pool of procurement managers that is available as domestic talent, but they are not pushed to think beyond their frontiers, and just because they're too hard pressed on this in the slew of tactical activities that they need to perform, right? Now, leading companies are starting to recognize talent shortage, and they're selectively trying to engage service providers for best practices adoption, skills upliftment, as well as outsourcing procurement processes. Right. So they want people to come in, for example, and create category handbooks. They want people to come in and document, standard operating procedures for all process areas, or for important process areas in the source to pay process spectrum. Right. They want people to come in and train their people, create templates, for example, with respect to RFPs, pricing worksheets, negotiation strategies. Companies want to do that. And then they're also concerned that, well, you create all this, and then how can we make sure that they don't become shelfwares, that they can actually be used by their internal personnel to boost productivity, right? And in some cases, they're starting to recognize that maybe I'll be better off outsourcing bits and pieces of my procurement processes to a service provider and have them do it, because they will be able to leverage economies of scale and do this with fewer number of FTEs. However, we need to recognize that for domestic companies, when it comes to procurement outsourcing, there is really not a case for labor arbitrage, right? So that's why that poses unique challenges to build a case, right? Because compared to companies in the Western world, where cost of labor is more, the case for procurement outsourcing is very clear. Well, I'm going to get maybe anywhere between 60 to 70-75% cost of labor reduction. And then the only thing is, can I get the same level of service levels? But here that's not the case. On top of service levels, there's this whole thing about labor cost reduction, right? And then the domestic companies are also faced with the challenge in the unavailability of, for example, unemployment benefits from the government, right, and unionized workforce. If I outsource certain procurement functions which are currently performed by the people who are my in-house workforce, what do I do with them? I cannot lay them off. Even if I want to redeploy them, then I need to reskill them. If I need to redeploy them, I may need to transfer them to another city or place, right? Would that be feasible? So those are some of the unique challenges they deal with. Even if companies are wanting to outsource, they have to figure a way to deal with these certain challenges. From the service provider's standpoint, let's say if companies are coming to the likes of us and they're asking, help us with, right? Even we have to deal with certain things, such as how can we justify taking over that spend or those certain set of categories or processes given the spend volume, right? Can we deploy full-time equivalents to take care of this? Because we are also going after the same labor market, so not that our labor costs are cheaper. But we believe that from an efficiency standpoint and from a best practices standpoint, there is value that service providers can add, and companies are also starting to see those benefits. They're also incentivizing firms and advisories to invest in longer term returns. There might not be a short-term business case in terms of cost reduction, but there is certainly a longer term business case in partnering with companies, imbibing their best practices, processes, learning from those, because all of the companies are in the growth path. As they grow, their procurement spend becomes larger, their procurement organizations become bigger, and they need external support to be able to enable them to sustain those growth. Now that we have finished talking about those challenges, and hopefully you resonate with those, you see many of those within your organizations, right? What can you do about it, right? And we provide a very succinct checklist for success and the benefits that come with it. First thing, we believe using strategic sourcing approaches and contract execution to establish category-specific purchasing processes and wing-to-wing costing has a very direct benefit to reduce transactional activities and build scalable processes. And what this would do is this would enable your company's growth objectives, right? Second thing we believe we can do is soliciting executive sponsorship, or you can do, is soliciting executive sponsorship for implementing a robust SRM strategy that is aligned with the company's overall business goals. What will this lead to? You will achieve greater value from suppliers. You will improve your product quality and standards through this. The last thing, or the third thing, I shouldn't say that's the last thing, but the third most important thing is you should definitely try to channelize majority of your spend through a P2P tool, and this would lead to greater compliance tracking and savings tracking, as well as you will be able to automate a large part of your order management processes. Why should you do this? Why would you make an investment? Because this investment would directly improve your purchasing organization's efficiency and standing within your company. And this is very critical because you're operating in an environment of high inflation and dynamic regulations. That's it. So that brings us to the end of our seminar and this webcast. I hope you will have more questions and comments. Please send us through, and we will also be publishing a white paper on this topic very shortly, so be on the lookout for that, and that will have more details behind some of these topics we have covered. Thanks again for listening in. Bye.